Assalamualaikum and hi. So for this week, we will learn about accruals and prepayment. Okay, if last week we learned about how to prepare a financial statement that consists of statement of financial position and statement of profit or loss. So for this week, we will learn about the adjustment for financial statement. The first adjustment is accruals and prepayment transaction. As mentioned in the prior chapter, we have illustrated the preparation of two financial statements, the statement of profit and or loss, and also the statement of financial position. Okay, the financial statement are prepared based on the balance in the trial balance. Okay, but it may not contain up to date and complete financial statement data because the trial balance it records only the expenses paid for the period and also record only the income received during the period. Therefore, adjusting entries are required every time financial statements are prepared. Therefore, in order to work out the correct net profit during the period, we have to do adjusting entries. Adjusting entries, this entry should be made at the end of the accounting period to ensure the income is recorded in the period in which it is earned and also the expenses are recognized in the period in which they are incurred. There are two types of adjusting entries for nominal account. Usually, it is either income or expenses account. For expenses, we want to recognize any prepaid expenses or expenses that has been paid in advance. Okay, for example, in January, we have paid the expenses, the payment for January until March. So we want to recognize the prepaid expenses of February and March to be recorded in our account. Okay, and then any accrued expenses or expenses owed or outstanding expenses that we didn't pay yet. For example, the bills for the utility bills for January, we doesn't pay it yet, and now it is in February. So we have to recognize the accrued expenses of January bill into our account so that we didn't understate our expenses. And then the other account is income. We want to recognize any income received in advance, or we call it as unearned income. Okay, for example, for our services, this is January. We have already received the income for the payment for our work to be done in February and March. So we have to record these two income received in advance in our account. Okay, and then we have to record any accrued income or income owed or outstanding income. Okay, for example, now is in January. Okay, we still doesn't receive our income in December last year. So we have to record the accrued income that we still doesn't get from our customer or our client. We have to record it as accrued income. So before recording the adjustment, okay, before recording any adjustment, we must observe the accounting period, okay, and then the balance brought down at the beginning of the year, okay, balance BD, and then any balance brought down at the end of the year, or balance CD, and then the amount that actually paid or received during the year, and amount that actually transferred to the statement of profit or loss during the year. So we have to take into account and we must observe this uh, information first before we record any income received in advance, any accrued income or prepaid expense or accrued expenses. In this chapter, we will look at the adjusting entries for these four items. First is prepaid expenses. Prepaid expenses are expenses paid for that will benefit more than one accounting period, meaning we paid as our expenses in advance, maybe for 3 or 4 months in advance, and we have to record the advance, and we have to do adjusting entries for any accrued expenses, our expenses that incurred during the accounting period, but the payment has not been made. Okay, and then any income received in advance or unearned income when the payment is received for services to be provided in future accounting period. Okay, but we have to record the income received in advance, and then any accrued income. The accrued income is income earned from services that have been performed but has not been billed or collected or recorded yet. Still, we have to recognize and make proper adjusting entries for these four items. Of this chapter, you can try to attempt the activities that consist of the MCQ question and also the problem-based question that will be provided in your tutorial session.